This shows I love what Wall Street Bets is doing with the democratization of crypto and DeFi. This is an incredible project with a hyper professional team that are building some really revolutionary products and decentralized apps for the community. The community that we have is unique and broad and wonderful, and it's wonderful to have a role in introducing the masses to DeFi. Today we have Eric Krown of Krown's Crypto Cave, which is a hugely popular YouTube show. He's an expert at technical analysis, an expert at markets, a really fun, warm, friendly voice to have in your ear, and someone who we think is going to bring some really unique perspectives to the show today. And we're going to talk about the state of crypto markets, Eric's unique approach to trading, and also the evolution of tokenized assets, as that's eventually going to relate to our ETPs. We also are going to have Jamie join us today. We heard the calling for more time with Jamie. I think the community's been really excited to connect with him. So he's going to join us in the dialogue. And we can kick off with some of these subjects. I'm just checking to see if we've got Jamie in the room yet. Looks like we're waiting for him 1 second. Oh, here he is.
Oh, there's
Sorry,
Jamie.
technical difficulties. Hi, how are you?
Hi, Jamie.
Hey there.
Hi, how are you guys?
Great. Oh yeah, so here's Krown. So Krown's been, I guess I'll kind of give my own little spiel with him too, because he and I have gone back and forth on Twitter, and I also listen to his YouTube channel quite a bit. I mean, wow, you've really grown that 75,000 subscribers now. So that's pretty impressive.
Things got a little bit crazy. It was never meant to be like that, but it's fun time, I would say.
Yeah, and I would say probably myself included, I'm certainly more on the technical TA side of things, especially when it comes to crypto and such. And I know one of the questions I think I asked you, Jamie, is like, you know, some of the Wall Street Bets faithful think TA is just you know, astrology for, you know, 30-some-year-old men.
It's worse.
Is is that not to cut off your own intro, but is that your feeling on things, or
You know, my personal feeling is no. Like I'm a fan of TA. In fact, when Wall Street Bets first started, it was pretty heavy on the TA. Not like crazy. You know, all the indicators and all these ridiculous things. You know, typical support resistance, maybe some trending channels or whatever. But people did like it, and in fact, back in the day, you could use bar graphs and stuff. But you know, you have Robinhood that comes out that has a line graph, literally makes it impossible to use TA. And oftentimes, TA not only does it deal with like the shape, you know, the chart patterns or whatever, it deals with probability and it deals with the expected outcome. And pennies really matter with that, right? So your actual execution is really relevant. And with the advent of Robinhood, well, it's not the best execution. So for those reasons, I actually disliked Robinhood. I didn't want to have it on Wall Street Bets, but I just allowed it to, you know, I'm far from the know-it-all, so I just let people do whatever they want. And turns out they kind of carved out a new niche for themselves in this new meme stock trading where they don't care. You know, when Roaring Kitty turns $50,000 into $50 million, he doesn't care. He got front run by a few cents for his stock option. So I don't think necessarily that they're rabidly against it. In fact, I don't think even fundamental investors are really against it. There is something to say. I think even Warren Buffett says he'll use TA not for making his investments, but to roll into his investments or to get out of his investments. He'll kind of be helped by it. I also spoke to, you know, the cool thing about trading is I've realized that there is no profitable strategy that's like the all win. It turns out there's a lot of them, including now meme stock trading. And it really matters on an individual level how much confidence people have and how much they understand what they're doing and what their plan is and how they don't let their emotions get into it. and I've seen all sorts of things be successful. In fact, one time I had in a live chat room had a guy that was like very successful, adamant technical trader, and he was a day trader. So he would work on he wouldn't even use a 1 minute chart. He would use the 133 tick chart, which is like crazier than a minute. And then the other guy that was also insanely successful, and he was just news. He's like, you guys are all crazy with your voodoo. I pay $20,000 a month to get my news 15 seconds before the rest of you, and I have it hooked up to my bracelet so it vibrates and I run on my computer, or whenever the chairman of the chairman of the Fed goes out there and announces a rate decision, I get it a few seconds before the rest of the world, and I act on it, right? Um, and I saw them both go head to head. I saw them both really make a ton of money, and it was interesting to watch them. But even he, the news guy that relies 100% on just having information faster, used technical analysis to scale in and out of his trades, right? So I don't think there's just an all out yes or no.
Venus, are you here?
Yeah,
There you
sorry.
go. Okay, so
Sorry about that. And Eric, can you tell us a little bit about how you came into this and what role technical analysis has played for you, and in your past with stocks or your present with crypto, like how is it more or less useful now versus then, and what sort of, if you can share with the audience also, like what corner of crypto do you tend to focus on?
do we have Eric?
Yeah, we have Eric. He's just muted right now.
Okay, no, I think, yeah, there we go.
Okay, there we go. Beautiful. Yeah, so I kind of got my start relatively early. My father was a trader on the Pacific Stock Exchange, so I'd go down and kind of clerk for him every summer between, when I was like 11 all the way throughout college, realistically. And throughout that time, I was kind of always like skeptical of, getting older and having to work like a job and everything. But when I went down to the floor and saw everyone there, everyone was like having a good fucking time. I remember this one story, this broker, who looked like he should have been like a Hell's Angel gang. And, keep in mind, I was like 12 years old. And this guy, asked my name, shakes my hand, and then he says, hey, wait a second, picks me up and throws me in a garbage can. And I thought that was hilarious when I was a kid. Yeah. There's some funny stuff that goes on down there, I'll tell you that. Anyway, so that kind of like quelled my fears about that. And I kind of naturally grew to, enjoy it. And be more and more interested in it. So after I kind of finished/left college, mostly just wasting time there, I guess, I harassed one of the guys that I met down there as a kid, and he was now on the floor of New York Stock Exchange, ARCA, as a market maker, but he had actually created his own market making platform. And he said, yeah, sure, I'll teach you how to use my platform, get you on the floor here, and you can start to meet some people. And I kind of just got lucky that way. And then I met a few other people down there, just as he said. And one of them ended up being my mentor, who kind of took me under his wing, said, hey, kid, you can trade my account.
Did we lose him?
I think we lost him. Eric, if you can hear us, we had you cut off for a second there. We know he was on the floor of the stock exchange. We know he's been thrown in a trash can.
Awesome. Like, I guarantee he's got some ridiculous stories, because like
Here
as
we
much
go.
as people think that, oh, there you are. Okay.
We got
Yeah,
him back.
all right.
Okay. We thought someone threw
sorry
you in a
about
trash
that.
can again. Welcome
It's a
back.
dangerous place, Finland.
Yeah.
So I don't know where I left off on that story, but I was just completing, at least on my end, I was just getting out of kind of market making and getting into crypto. So I left traditional markets and just kind of liked the whole ideology of crypto because there's a ton of opportunity. I saw Bitcoin in 2016, 2017 move from was like 3 digits to $20,000. And at that point I said, okay, well, no more, regulatory overhead, no more being connected to the servers all the time, no more risk managers telling me what to do. I think
Mhm.
I'll go over here for a bit and kind of take advantage of this opportunity the best way that I can. And so that's when I really just started to employ a lot more technical analysis as far as to what I was personally doing. And that's kind of where I'm at today. And yeah, fun
So
little time.
what was your first impression of Bitcoin when it first hit your radar and you got some abstract information about it? How did you process that? How did you look at it?
Yeah, it was really interesting, actually. I first actually heard about it in 2013, 2014, because everyone on the floor heard about it, basically, because we all saw it go from like $100 to $1,100 in, what felt like 4 or 5 months. And so we all were interested in it, but I didn't actually come back until 2016, 2017, when one of my friends hit me up and said, hey, man, you got to check out this market right now. It's crazy. The money is extremely easy. This is a cool thing. And so then I started to really get interested in it, and then actually started reading about the underlying technology, which I thought was even more interesting and actually aligned with a lot of my values. Because Bitcoin, at its core is what? It's basically an asset that gives you more, autonomous financial control over your life, which I think is a generally good thing. Maybe it's not for everyone, and that's completely, reasonable. Not everyone wants to be their own bank, of course, and probably not everyone should. But I do think that, having that sort of ownership in this digital age is a humongous, it's just a humongous advantage. And that is kind of where I see the future going. I mean, it seems like everything in this age, this information age, is trending towards digitalization. So it makes sense that Bitcoin will probably be positioned best to be the major asset for that. I think people like to make the corollary to digital gold, right? And
Mhm.
I mean, it kind of is, right? It's kind of like a digital asset that you can own.
I mean, it's interesting to hear that you took to it so fast when coming from a traditional finance background, because I find that's where I observe the most resistance. Are people who really understand the traditional markets tend to have the most skepticism about it, versus everyday people who might not have ever thought about the traditional markets tend to get more turned on by it more quickly. So it's amazing that you were able to make that transition so quickly, without those sort of like barriers of the mind.
Yeah, definitely. I was also a little bit on the younger side too, so I was more open to that sort of thing. And if you were born anytime after like what, 1985, you pretty much
Yeah.
grown up with the internet, so you can kind of see that whether you like it or not, this is where things are going. And so it just, it seemed very interesting. There's a lot of opportunity, so it just kind of married up both ideas and went full in.
Yeah, that's amazing. Jamie, I'm going to now put the same question to you, which is, what was your first impression of Bitcoin the first time you heard of it?
So, when I first heard of it when it started back in, probably the first time, maybe 2013-ish. So it was a few years after it started. I don't know the exact date, but I'm guessing it was probably sometime between 2008, 2010. And I found it a fascinating concept, right? Like, I'm an economist at heart, and then a troll in public, but I really appreciated the effort and the understanding of both economics and technology to pull this thing off, right? Here you have
Uh-huh.
this cryptologically secured, whatever, all these things that everyone now knows about this blockchain, which is just magnificent application of computer algorithms, right, and hash functions and cryptology to secure these things, and then have it be sustained in a decentralized fashion. Because let's be honest, the internet is not decentralized. The internet resides on a server that is probably on Amazon, and even if you want to get access to the internet, you have just a handful of backbone cables that actually connect the Atlantic to the to Europe, and the Pacific to Asia, and whatever. And so in theory, it's not truly decentralized. And this thing, because it lived on people's computers, similar to the way that BitTorrent, that was, like, I think, the first real decentralized application of a technology. I thought it was cool. And then on the economic side, it's like, wow, this guy got it. These things, this money is exchanged for goods and services, is scarce, meaning it runs out, right? You don't
Mm-hmm.
have infinite of it, and
Mm-hmm.
it's durable. You can't destroy it. Like money, if you take a dollar bill and you put it in a washing machine, it's not gonna, the ink's not gonna come off, right? Like that is one of the fundamental properties. This thing also works. So I was like, oh, this is super cool. And then I just kind of, I'll monitor this thing. And then it started growing in popularity. Then I tried to dabble in it, but it was just really difficult. And even though I myself have a tech background, I just didn't have the time or energy to do it. I think I might have tried to start a mining, like download it to start mining it, and then I just kind of gave up on it or whatever. And then it just kept following it along. And then as Wall Street Bets starts to grow, the mention of Bitcoin starts to grow as well. And I, for technical reasons, because I am a technical guy at heart, didn't love the idea of having Bitcoin being part of a tradable asset, right? And at this point, I'm also having to make this mental transition from this is a currency to this is a store of value, because in all reality, that's what it's become. There's a lot of inefficiencies with it being a currency and all these things, and that's what spawned out of these other tokens that come out. But as a store of value, it's pretty cool too. And it's volatile like crazy, so that's great for traders. But still, the execution was awful. The spreads were insane. How long it takes for this things to confirm was too long. Like it was hard to apply, and the volume wasn't strong enough to make technical analysis really worthwhile. Volume is one of the most important things, and so I'm like, no, this is no good. And then I just kind of ignore it. I don't revisit that decision for many years. And I see these other altcoins coming out, and I see that they're fixing some of the problems with Bitcoin. And by problems, I mean making it a more efficient currency. And then you start coming up with stable coins because nobody wants to put their money in something that swings 75% overnight. And but I can see where this thing is going. But I didn't go back and actually try to buy a Bitcoin or actually try to see. I think I got into it a little bit also around 2017, 2018. At the time I'd moved to Mexico, and I started using these brokers that for anyone that's overseas will be familiar with. These are CFD brokers like eToro and stuff. And those give you access to, through derivatives, they give you access to underlying stuff like indices, stocks, and then cryptocurrencies, Forex, things like that. So like, okay, cool. This is cool. I'm not actually going to buy a Bitcoin because I don't have the wallet or whatever, but this allows me to purchase a Bitcoin contract and then and it's leveraged like crazy. Like I remember now I was trading like $2,000 or $3,000 per coin, and this platform gave me 100-to-1 leverage, and I made like an insane amount, and they quickly switched it to 10x leverage because it went so nuts. I guarantee you they lost money from that. But I start making money on a ramp up, and I made like, I don't know, maybe I put in like $2,000 or $3,000 in, and I made like $30,000 in a couple of days. I was like, oh, this is great. And then I get on the bull train with way too much leverage, way too much leverage, and I get completely wiped out, right? And so I'm like, okay, well, there goes that. I'll go back to my indices. But yeah, no, then I saw it could go mainstream, and now that I'm immersed, now I've admitted my mistake of not revisiting this earlier. Crypto is so much more advanced than I could have ever dreamed of. It's fixed all the problems and then some. Like it's taken. The other day I was on Binance and I was looking at these Bitcoin prices, and then I'm just clicking buttons, and I end up on one page which is like an ETF button, and it says, oh, this is BTC up and BTC down. And so I noticed that the percentages were not quite matching the Bitcoin's price. And so then I opened it up and read the thing. It says, oh, because this is leveraged, it's sometimes somewhere between 1.5 and 4x leverage. I'm like, weird. Okay, well, let's see what this does. And so I try to buy it, and it says, sorry, you need to watch this video and take a quiz, which I was baffled by, right? You try to do that with Robinhood on selling box spreads, like they'll let you write at it. They'll just ask you, do you know what you're doing? Yeah, okay. And so I thought it was kind of cool that they did that, because I'm like, whatever, I already know everything about the market. There's nothing you could possibly teach me. And I was very wrong, because they said, hey, we figured out how to do leveraged ETFs better, because leveraged ETFs have these things called volatility decay, which I've known about forever. And most people don't really realize that, because we've been in a bull market for so long that they don't realize the problem with leveraged ETFs. but there is a huge problem, and these guys fixed it in a really creative manner. So I'm like, damn it, there's yet another thing that crypto has brought to the world of finance that has just completely obliterated them. And so now I'm a big fan. There's obviously great volume, the spreads are tight, you have every type of tool available, the access for them is great. You can do options, you can do futures, you can do whatever you want. Like, it is a normal ad. I can keep talking.
I think we lost Venus there.
Venus, you can talk.
Yeah, I'm here. I got muted again for a second. Sorry.
There we go.
We'll figure this out. In BTC Fix, you're still with us, yeah? I think he has a question.
Oh, I
well
do. Yeah,
for...
I do have a question. Yeah. So you were saying that the spreads were wide, and there wasn't a lot of players in the market in the early day, and TA didn't really work. But this kind of leads me into why I want to ask Eric about his trading style, because I think the pureness of the market at that point was a lot different in terms of what it is now, when we have very large hedge funds with HFT stuff going on and such like that. Because I feel like trading's gotten much harder on some of the majors like Bitcoin. I just kind of wanted to circle back and see, like, Eric, what's your kind of style, and what have you seen the changes in the crypto market, structurally wise?
Yeah, it's actually a really good question, man. I was thinking about that the other day. So the biggest thing that I see over like the last 3-4 years is that trading's definitely gotten more difficult in cryptocurrency land. It's becoming more and more like what you see in traditional land, where these big players will come in, they'll make themselves known, and you'll see a lot more of this like trappy behavior. I'm sure you know this one, Vix. The old BART. Remember that one from a year and a half ago?
Oh
The
yeah,
new
yeah,
pattern
the
that
BART
came-
BART
Yeah.
formation. Yeah.
And now it's just so nasty, man. So you'll see more stuff like that. And realistically, I do think that while a lot of versions of technical analysis work, and you could get away with a lot more, especially like earlier on in the day for Bitcoin specifically. Nowadays, I do think that some things are kind of being made somewhat more obsolete, and the game is kind of being twisted a little bit more in line with what is your edge as a retailer. If you're a retailer, you are going to be playing against these bigger players, whether they're a quant firm, whether they're a big market making firm, a liquidity provider, or some massive hedge fund, whatever, because they're all kind of involved in this thing now. You really have to, I don't think that you can like play the second time frame anymore and expect good results. Or I mean, even before it's pretty difficult to do that, but nowadays it's like very, very difficult. There's just too much randomness going on down there, too much unpredictability, which makes it a lot more difficult, obviously. So for myself, what am I doing as far as trading? Well, things got a lot more difficult for me actually recently, as I was kicked off a Deribit, which is pretty much the only worthwhile options exchange for Bitcoin. They obviously don't host Americans there, and I'm an American citizen by birth, even though I do live over here in Europe. And that really kind of put a damper on my game. But before that, it was pretty, I don't want to say it was easy. Nothing's like easy in this game, obviously, but it was very forgiving is what I'll say. So what I would typically do is I'd absolutely love these sideways markets, which Bitcoin loves to put in. It plays these massive ranges, but a lot of the time sideways. And so what I'd be doing is I'd be basically playing, these massive strangles whenever we hit like a major, daily support or resistance, and I'd hold those for sometimes, like a month or two on end, and then trade, spot positions or futures positions around it. Nowadays, since I can't do that anymore, it's actually a lot more simple what I do. Actually, you just play pretty much straight up structure on price action. So, your generic support and resistance, just looking at, a 4-hour for the most part, marking off your highs and lows, and then kind of matching it up with either a volatility indicator, which I use the BBWP. It's actually a community-driven indicator that we had made for us. It's just basically the Bollinger Band with percentile. So it gives you an idea of kind of where we are in the grand scheme of things from a statistical analysis on the current volatility for that time frame compared to like the last, I use like a 252 look back period, and then I'll match that up with like a momentum oscillator. So something simple. I mean, I've been using the RSI for 10 years now, and I'll probably continue to use it for another 10 years because, well, I mean, the weird thing is that it just works. So what I'll typically do is I'll try to just scalp very, very small moves on, like a 4-hour time frame whenever we hit one of those major supported resistances, and then looked to see if I can like maybe hold it for a potential breakout trade based off of what the volatility is doing there. Ideally, though, I do just want to stay within those range trades. So when Bitcoin is trending, I'm pretty much, for all that it's worth of like having all these years of experiences of trading, I'm probably probably have like a worse P&L in the full-on bull market like what we saw over the past year, because I'm trading, these moves and people are just like blindly hitting the green button and making a shit ton of money,
Right.
which obviously, is very easy to do when Bitcoin goes from basically what, 4,000 to 60,000 bucks in a year. Pretty damn
Right.
impressive stuff right there. But the real game right now is that obviously Bitcoin has topped out a bit. Whether you're bullish or bearish on this asset, it's a much more difficult trading environment, which I think anyone can agree with. And I imagine this next couple months here, 2 to 4 months, is going to be even more nasty. I have a feeling that we're going to see some extremely nasty traps. First, probably to the upside and then to the downside. And this is
Right.
going to be a very, very difficult game coming up, which was oh so generous for the past year.
Do
You want to? I want to interject over here because I agree with everything that Eric said, except for what I hear as he's talking about this is like the legitimacy of the system, right? Like any time that you say something is harder to make money on, it means the inefficiencies are getting plugged. The reason why
Yes.
trading makes sense is because there's inefficiencies that are being exploited, and the more people that get into it and the more approaches they have, the more they shrink. So that sucks for traders, and I get that, and I can sympathize with that because I'm myself one. But it's that much more legitimate, like, talking about the productivity of price discovery. You talk about the productivity of just a functional market, what that means for volatility and things like that, is a great thing
Oh,
for
totally.
this to go through.
Totally.
So
I mean, make no mistake about it. This asset is still, pretty damn immature, right? Like we compare it to gold, right? We call Bitcoin digital gold. Gold has a market cap of what, 9-10 trillion? Bitcoin has a market cap of about 1 trillion. So it's still a pretty immature asset. And at some point, it will be on that scale, I imagine, as well. And that's just the signs of maturing market, which is generally a good thing. As you said, it just means that, this asset is being legitimized. And we see that. We see the infrastructure being built up all around the lands. I mean, just a couple of years ago, Bitcoin got, its first futures on CME and actually SIBO as well before they delisted it for non-activity. And then now what do we see? We see like an ETF talked about. We see a country adopting it as legal tender, which is quite the thing, I guess. And it seems like all roads kind of lead towards whether it's Bitcoin or maybe not Bitcoin. I think it's going to probably be Bitcoin, but this is, very likely going to be the future.
That's amazing. And so the sideways market doesn't deactivate you from trading. It doesn't make you say, I'm going to, go into stables
that is
instead on
my
the side.
environment. Yeah. See, the thing is that when things are trending, especially to the upside, I mean, what's the best thing to do? Is just to really sit on your hands and maybe trade on like, like a weekly pivot, which you get like once every couple months. It doesn't happen too often. So you're mostly just sitting on your hands. Now we actually have to do a little bit of working, which, is fun. I mean, trading at the end of the day, I kind of look at it as like a video game. It's a video game with financial consequences and a really fun one at that.
And so how many cumulative years do you have now as a trader?
I guess it kind of depends where you take it from, but I suppose like as of trading actual money, a little bit over 10 years. I think about 11 years now. I mean, if you count all the experience that I had, even as a kid, I guess that elongated out to maybe like 20 or some odd change.
That's amazing. And how have you, in terms of your observation, you've been in crypto a while. Jamie's in Mexico City, you're in Finland. What is the observation you have in Finland in terms of the general perception, attitude, sentiment towards the crypto market there? Is it more hospitable, less hospitable? And does it have anything to do with the reasons you moved there?
It has zero reason to do with why I moved here. Unfortunately, Finland it's neither welcoming nor hating, I suppose, would be the right terminology. But realistically, the countries that are going to be most friendly or most open to cryptocurrencies at the beginning, when we're still in this very early stage, all things considered, are probably going to be like the more developing type of countries. I don't think European countries, especially like some of these, Germany and all these Nordic countries and England and all these things, they just don't need it right now. Like they don't see the issues with what's going on. Now, living abroad, and I'm sure Jamie knows this as well, when you're trying to like move money from country to country, if like you're not in, if you're not in the States and all of your finances come from there, all of your bank accounts come from there, it ain't so easy actually, and it ain't so fast either. So you immediately see the value of something like this, where you always have kind of control over it and you can send it wherever you want, whenever you want. Just right now, we don't have the easiest means of using it. I mean, there's some like crypto debit cards, I guess now, like Monaco, or I guess they call themselves crypto.com now or whatever. And I think that there's a few more coming out as well. And it's certainly like going to be the trend, I imagine. But as far as Finland being, welcoming towards cryptocurrencies, I guess it kind of goes the way of most countries. Like the younger generations, pretty receptive to it, pretty friendly towards it, and kind of generally very interested in it. The older generations, they just it kind of just goes over the head for the most part.
Right. And Jamie, with you, in Mexico City, are you finding that to be similar or different? Do you feel like, an island down there, or do you feel like you have a community?
Mexico's kind of well, first of all, the Bitcoin communities are everywhere, right? If that's where your question was going towards. So you do have people that are into it there, but Mexico's kind of like a strange place. It's always been behind the curve of the US, right? When I moved here 7 years ago, people didn't know what Uber was, and people didn't dare order stuff on Amazon because they didn't trust the internet. Now, obviously, Uber has taken over everything, and now you have same day deliveries on Amazon. So, so we know where the trend's going to go, but we are a little bit behind on that. The government is really fickle and nimble, and it really just kind of depends on who's in charge, and they switch presidencies overnight, and like the entire everything tone, just the entire socio-political environment changes. So it really just depends. Right now, they don't really care very much about it. But we do have one accredited major, whatever broker that allows you to, to trade Bitcoin and plug it into your bank account, which is a big deal because it's hard to do that here. There are some laws that are like fintech related laws that really make it difficult for you to have, for example, like a wallet, like a PayPal wallet. If you have PayPal here in Mexico, you can't actually store money in it. It's just an interface between your PayPal and your bank. So when somebody deposits money into my PayPal, it funnels into my bank and vice versa. So that accomplishment is pretty big deal because that makes it easier. And lucky for me, I've discovered and agree with Eric, moving money is a pain in the ass. And it's so archaic. Yeah, I would have to, and that part of the reason why I started using CFD brokers was because I didn't feel like dealing with money. And if I wanted to transfer money from the US to Mexico, I would have to have someone in the US go to the bank, physically fill out a form, and where they writing with a pencil 18 digits, which are hopefully legible, right? They sign the thing and the money disappears from one account and it's just in limbo for a week or more, paying ridiculous exchange fees, and then praying that there's no mistake that's made and the money kind of shows up again. And we had a couple of pretty innovative fintech companies that kind of addressed that issue, but it still had issues. Now that I've used crypto to move money back and forth, it is a joke. It doesn't matter how much money you move. It doesn't matter anything. You do it instantly, and you have to do it for free, and it's wonderful. At this point, if you want to do big transactions, then you need to do the KYC levels. So, a pretty low limit for anonymous, and then you can kind of work your way up. But it's relatively easy, and it's wonderful.
Yeah, and
I
actually,
love it.
more. Sorry, not to cut
No,
you off.
please
But
go ahead,
just to
Garrett.
that
Go
point,
ahead.
yeah, of course. More to that point, and I'm not sure how it would be in Mexico because it's like, it's kind of linked up with America in some ways. But if you're an American, for example, trying to get a bank account in any other country, especially in Europe, Asia, whatever, it's extremely difficult because we have all these laws and whatnot. So having something like cryptocurrency just makes it just so much more simple because you don't have to deal with like these very, very strange laws that the US has. I don't know if people are aware of this, but if you're an American citizen and you live abroad and you want to have a bank account and, I don't know, enter, whatever European country you want, you're going to have to comply with all these laws. One of them is called FATCA and one of them is called FBAR. Basically, you have to tell the US government, you have to tell your overlords exactly where your accounts are, how much money you have in them, and if you don't, then it's not just like a slap on the wrist. It's like serious issue. On top of that, the banks themselves, they actually have to like go through all this rigmarole too, because they're required by like I think the Bank Secrecy Act, I think that's what it's called, where they literally have to they have to have direct communication, I believe, with the U.S. authorities and tell them everything that goes on in that American's account. Otherwise, they face like serious financial consequences. So that sort of thing immediately made me extremely appreciate crypto and more or less Bitcoin, realistically, immensely. After moving over here.
And so we sort of talked about, I mean, it's interesting to hear all that. It's interesting that both of you, have found lives abroad that are obviously, I think, better enabled by the crypto markets, whether it's investing or trading. And now sort of what I'd love to pivot into is the evolution of tokenized assets, which is, sort of a new frontier of crypto. And, basically opens up this global landscape where you're not limited to stocks or faculties that are available in one specific region, but actually something that's global, that's 24/7. And obviously Wall Street Bets is putting together its ETP products. And so Eric, I'd love to hear you talk about from your perspective, the evolution of tokenized assets, how you perceive them, what excites you about them, and whether it's something that you're going to be investing in.
Right. Yeah. It's an incredibly interesting thing, right? Because basically, what does it allow us to do? It allows us to trade stocks in a more direct way, and we can now trade 24/7, which is what I'm mostly focused on. I'm probably not the best person to ask about like the underlying technology about it and everything like that, but from the way that I see it, it just makes things more accessible. It makes them, it makes it.
We lost you. Stop talking.
Eric,
There
you've
we
cut
go.
out for just a moment. There we go.
Oh, that was weird. Yeah, I was just saying, you probably don't, or at least I'm not the best person to ask about the underlying technology of it. But what I do like about it is I think whatever trader likes about it, you can now trade these things, 365, 24/7, right? And there's going to be a lot of sleepless nights, I imagine, from now on. But that just brings more players in the game, which is going to, further democratize this whole sort of situation. And I imagine it's more or less a generally good thing. This is where the trend is going. Like the whole day, the whole like stock trading day where we only trade for 6.5 hours, and it's like, okay, you're done after that. Yeah, you have after hours and everything else, but that's not. It's kind of different, obviously. That just doesn't really make too much sense when you think about it. Like these companies that you're trading, they're operating in the off hours, and things can obviously happen that will massively affect price action in those hours too. I mean, shit, like half the time, the Fed will come out and say something in the after hours, and it's like that's going to massively affect the market.
Mm-hmm.
So it just makes a lot more sense to have that more or less from a risk management standpoint, because sometimes I remember there were a few times when I was trading traditional markets, it's like I'd wake up in the morning and something would happen overnight while I was sleeping, and I'm like, oh my god, I'm so screwed, and I need to do something immediately.
Yeah.
And the market's not going to open for another couple hours.
Yeah, and the average retail trader doesn't have a particularly good edge in that scenario either.
Right.
I think that's where they get especially kind of boned by the system.
And I want to add to that as well, and that's kind of the focus that I was going towards, is this bigger picture stuff, right? And that's what you touched on. Yeah, I'm glad that you did, which is the risk not just to you but to the system itself. The closing the markets poses a tremendous risk to the market. Having a metronome where it says every day at this time it closes, even if nothing happens after hours, like there's still a huge risk. You'll notice that the market behaves differently at 3:30 in the afternoon, and if it's on certain Fridays of the month or whatever, because things expire or they have to roll things over or whatever, you have everyone that takes action to try and rebalance their stuff, and all that poses it has created really funky behavior in the past. We had a situation in 2018 where VIX futures went crazy because of these leveraged ETFs on top of. I mean, it's really people that don't understand these things, I cannot explain it to them. But you have leveraged ETFs on a VIX, which is just like a math formula that measures the implied volatility of stock options on the S&P 500, that whatever, and it fluctuated. And because of this thing, it just dominoed effect, and the markets dropped like 5% for no reason. And the reason was because of these rebalancing things. Like if markets didn't close and these guys all had to just constantly be on top of these things, it creates a stronger market. Plus, now we can take the gap risk out of it, right? Which is what Eric was saying towards the end. When you close a market and then you open it again, you don't hit your stops. And when you don't hit your stops, it sucks for you. You think about what it means for like a large fund or a large institution, it throws their risk profile completely out of whack, because now they've gone over whatever their limits were and they have to compensate for that doing other funky stuff, right? And so having a market open 24/7, although in the short term is going to pose a really big risk, because you're going to have the underlying assets closed and these tokenized tokens or whatever trading real time, there will be a risk associated. But if crypto can push Wall Street and mainstream finance into adopting this, okay, well, now you have extended hours. When I used to trade a lot of equities back before 2014, after hours was, I forget how long it took, maybe 30 minutes or an hour. And then before the market, it was same thing, like maybe an hour or two. Now I noticed that like the S&P, the SPY ETF, that thing trades pretty much 24/7, right? So they're already kind of pushing the limits of what these hours are. Let's continue finishing closing this gap, right? Let's get rid of Sundays while we're at it. And I think that's going to create a very sustainable financial system. And yes, the access to these equities, like I want to invest in Samsung. I love Samsung, but I can't, right? Because I don't live in Korea. And I'm not going to go through the hassle of doing that, right? So this democratization of things, like the individual investor, means now you can invest in whatever you want. And then Samsung itself is going to benefit from this, because you're going to have more people weighing in on what they believe the price of that underlying share should be. And that's going to ultimately result in a more resilient market.
Yeah, absolutely agreed on a lot of that. And what my real question is that once we do kind of move into that sort of an era, is what's going to happen to like the regular, trading day floors? Because I'm sure anyone here who's traded stocks for, any amount of time, that in the first hour and a half of the opening bell, in like the last half hour of the day, 90% of the business gets done around those times. Very rarely, is anything super significant happen in the intraday, between those two, time zones. I mean, most people, when I was trading, would just leave. Like I'd say 30% of people on the floor would just leave during those times and come back, later in the day just to trade like the last 30 minutes.
And Vix, what's your take on this? They're touching on a lot of things that form your vision for this project.
Well, and all about this kind of idea that you only have this amount of time to do your trades and during this period. I also think, especially kind of which extremely relevant for Wall Street Bets, is like GME. Some of the biggest moves were the gaps, right? And you would see this, the market would close, and probably some other hedge fund would just run through the book because they could. And they knew they could do that at the times because it was thinly traded. So that's what we're seeing a lot too, is this kind of manipulation with large gaps that can affect both sides of things. So at some point, I think it's inevitable we're going to see things move towards 24/7 and tokenized instruments and assets in general. And that doesn't just include stocks, which is why we're talking here mostly, but also stuff like NFTs. What happens when people or somebody tells people, hey, you can take your NFT and cut it up into 100,000 pieces, and now each people can own a tokenized version of that NFT, and then there can be liquid markets for it and ETFs or ETPs or whatever comes out of that. So I think on that side is really the most interesting part to me, is nothing's really off limits anymore.
Right. And do you think that this accessibility of, again, you can have an LVMH stock, you can have a Samsung, you can have global stocks in one ETP on a 24/7 hour market. Do you think that that gives a unique advantage to retail traders and everyday traders that isn't available to them in the traditional marketplace?
I
Look,
mean,
the
it's go ahead.
go ahead, go ahead. All right,
Oh,
so
yeah. So
yes,
I would say yeah. I mean, it's probably going to be marginal, yes, but a lot of the after hours trading and especially stuff done on futures, when everyone's kind of sleeping, a lot of the time that is I don't like the word manipulation, but it is it is manipulating the view to most of the time presenting a bit of an opposite case. Like how many times have you seen futures market open, showing like a plus whatever percent open, and then they slam it down right at the beginning of the session. I mean, it happens all the time. And so if things are trading 24/7, then I suppose the average person is going to have more democratized access to make their own decisions in those times as well. And it'll be a little bit more of a level playing field. I mean, still, at the end of the day, you are competing with hedge funds that have billions, in some cases trillions, right? And that's
Hmm.
just you're never going to get around.
I think, Eric, we've just cut you off for 1 second right after trillions.
Oh, there we go.
Got him back.
I was mostly just saying that it's generally a step in the right direction, making it a more even playing field for people.
I look at it. I look at it from that standpoint of, it's not necessarily like an either or, a binary like we're gonna go all this way or all the other way. It's just another option. And I think Eric, especially, I came into the crypto world being pretty I don't ideological. And over my years I've kind of ventured more into the middle and more into the truth is
Yeah,
probably somewhere between the two parties that are screaming the other one's wrong.
absolutely,
especially
absolutely.
especially when you monitor crypto Twitter, especially in terms of what information's being put out there, and all too well how much the FUD circulates, or
Yeah.
even something extremely positive. It's usually I like to go, truth is probably somewhere in the middle there. There's lots of unknowns, and it's very unlikely one side is totally right.
Yeah, 100%. I mean, just in a more easy sense to kind of relate to as well. A lot of people in the crypto space, they want to decentralize everything, right? Like, let's just put decentralized, whatever the hell, on every goddamn thing, including like exchanges, for example, which you really don't want a decentralized exchange. It's actually a really bad idea. The reason why, and I'm sure most people can relate to this right here, is that what if, you enter in like a fat finger order and you put in like 1 million shares when you really meant 1 or 10 or whatever. And usually in traditional markets, what I do is if I made like a, bad or just something that obviously I didn't mean to do, I'll just call up my manager and I'd say, hey, could you post this trade for me? It's pretty embarrassing, but at least you can do it with those sorts of things. And if we were, to go to like a decentralized exchange, for example, like who do you call when you have an issue? Because issues will arise. I don't care how good the technology is. Um, it's bound to have some issue, either foreseen or unforeseen, at some point over a long enough period of time. And that's like real money at stake too for people.
This is amazing to have your thoughts and insights. It sounds like there's a bit of a mirrored philosophy about this here, which I love. We have some eager people in the audience who would love to ask you guys some questions, and so we have about 8 minutes for the audience to jump in to the Q&A here. If you'd like to speak to these gentlemen, please raise your hands. Ask to be unmuted, and we'll go
And
now. Meow is going to join us for the Q&A.
okay.
Here, I've been listening. Oh, J-Man here. I think you want to ask something.
Ooh, hi. How are you guys?
Hi,
Good.
J-Man.
Hey there.
Hey, great. This is kind of for Jamie and Krown here. So I in this space, information is pretty much the best source of income outside of dumb luck. But to the folks that are newer here, and I'm super curious too, because I know information at your guys' level is 10 times, maybe 1,000 times what it is at mine. What can we do to equip ourselves to front run the industry? I mean, is that even possible? I mean, out of your guys' experience? Because
You want to go first, Jamie? Oh, I can take this one. Okay, well, I suppose I'll take that then.
Oh,
So
sorry, I
what
was
can you
on double
do?
mute.
Okay.
Yeah, go ahead.
Okay, fair
Eric,
enough.
why don't you go first and then we'll follow up with Jamie.
Okay, very cool. Okay, so the question is basically, where can you have an edge as a retailer? Now, your edge is not going to come from knowing news because realistically, if you're playing the news game, you're going to be the last person to know as a retailer, unless you have insider information. Jamie gave the example earlier of a guy who paid like 15,000 bucks, probably for like a Bloomberg terminal, I'm guessing, per month to get literally news stories like 15 seconds before. I mean, that is a bit of an edge, yes, but realistically, if you're going to be a retailer, your edges are somewhat limited. So you have to be playing, in my opinion, a game that is not going to be directly against, the bigger players who are going to be a lot more difficult to, well, play with. So what are they typically doing? Well, for the most part, if you're going against like a hedge fund, a quant firm, whatever, they're probably going to be doing something with like high frequency trading. They're probably going to be on like very low term time frames. They're probably going to be doing a lot of like what a lot of the time what they're doing is they're just trying to bait other algos into doing something stupid so they can take advantage of them. I actually had a friend who was working at a quant firm, and that's literally all that he did. He would just make algos that tried to fuck with other algos, basically. Anyways, as a retailer, how do you kind of get around that? Well, you can still play the more medium long-term game. So when you are just looking at the most generic form of technical analysis that I do, which is simply looking at trend, it's quite a powerful thing, actually. It's kind of funny that we all try to do like these really very complicated type things, and I love that too. Like, don't get me wrong, but at the end of the day, if you are a retailer and you want just the most simple sort of strategy, the simple sort of thing that you can look at, look at the daily trend, look at the weekly trend. Half the time or not half the time, like 90% of the time when the weekly trend changes and when you actually have a confirmed, actual reversal, you can trade typically with confidence, in that direction on the actual trend. And you can typically do that, down to a daily with pretty damn good results as a retailer. You're not going to be really, competing with anyone else who is going to, really care about you and try to try to, set that off kilter. In a little bit more of a complicated sense, but still somewhat basic, kind of doing what I do right now is very accessible to most people as well. Just playing the sport and resistance game. I mean, what is technical analysis doing at its core? It's essentially trying to figure out what these bigger players who actually move the markets are doing. And where can you find that out? Well, you can see what they're doing in the charts. So when you have like a nice market structure, you have a very obvious area where someone's trying to accumulate and a very obvious area where someone's trying to distribute. You can play along with that. The idea is to play with those people, not against them as much as you can, because it's very difficult to win that game. I've been on the other side of it myself, and I can assure you that while some people will have, intermediate success, here and there, it's very difficult to do it on a prolonged time frame. And I know very few people who can play that kind of quant game against those, those bigger firms and come out on top over a long enough period of time. So realistically, technical analysis it's imperfect as it is. But it's good enough to kind of figure out what the bigger players are doing, and that's essentially what you want to, jump on for.
It's a great response, Eric. Jamie, do you have anything you'd like to add to that for J-Man's question?
Yeah, no, like I was going to say the exact same thing. When I started to talk to myself earlier, I was saying you don't want to try and front run the big guys, right? Like the idea is for you to try and find edge, and you're not going to get it by trying to beat the other guys at their own game. Right? You're gonna find your own. There's plenty of ways to just going along with the trend. Like Eric said, you may not get the lowest possible tick or whatever. You're not going to sell at the bottom, or sorry, buy at the bottom and sell at the top, or vice versa. But you can get in a little bit later and then just assure yourself some money, right? Like these very basic, and I too can get lost with the technical analysis, not so much in the charts, like the patterns. Like I've really narrowed it down to really support, resistance, and a handful of other variations of it. And I've played with every indicator and overlay and all these different things, and I understand how they work, and I understand the theory behind them, and I understand how you compute these things, and I've coded my own, and I had a great time because it's a great mental exercise. Dealing with it sounds like this Bollinger Band indicator is an interesting one because I have a similar one that deals with basically it's a volatility band, and they all pretty much kind of get towards the same thing, and it's wonderful to understand. But at the end of the day, if you put way too many things on there, you'll get conflicting things. That you want to stick to a handful of just proven methods, and what you want to do is start to get confidence in yourself, because that is probably the most repeated part. That and risk management are probably the most repeated bits of advice that you'll hear anywhere and everywhere. And it's for a good reason, because you can have two people that have the exact same knowledge and they execute differently because they handle things differently. That you'll have
100%.
it,
Yeah.
trying to do the same thing, even not even just the same knowledge. They'll agree that this is support, and they'll agree that this is where they want to buy, and they'll agree that's where they want to sell, and they'll agree with where they're going to put their stops. But one guy's going to move his stops all of a sudden because he thinks it's, he'll lose confidence, and then his entire math model breaks down, right? So get confident. And I've seen conflicting times where people say, I think the stock's going to go up because of these reasons, and the other guy says, I think the stock's going to go down because of those reasons. And I've seen them both make money on the exact same trade because of how they executed their trade, and they understood their own knowledge well enough to say, well, maybe you're right when it comes down to the earnings report thing or whatever, but I'm right in that first you're going to get this liquidity event that's going to tap down to this level right here, and then it's going to pop up to that one there. And then all of a sudden it's like, wow, you guys both made money thinking this stock was going to do the opposite thing based off of conviction in your plan, sticking to your plan, understanding it, and actually executing it correctly. So there's plenty of ways to make money on a very simple level. Don't try to beat the other guys at their own game. The only example that I can say that retail people have beat the big guys at their own game was a black swan, which is not going to be repeated, which was GameStop, right? This was the one time where retailers got together and it was more than a short squeeze. It was a very technical move. And a lot of people understood the technical move behind it, dealt with the stock options, it dealt with the liquidity, dealt with the short float, and then it had the good fortune of being splattered on the mainstream media, which then exacerbated that effect. But now that inefficiency is closed. You saw it with AMC. People try to do the same thing. They push the stock price up quite a bit, but you looked at the stock options, right, which play a big role into how these things play out. Those things were crazy expensive. These market makers were like, not again, right? And that dampens the effect. So just stick to something basic, practice it, learn it, and don't try to make it too complicated.
100%. I couldn't agree more with what you said, Jamie, about GameStop and that whole business. But you said something incredibly powerful right there that I really actually want to expand upon. You said something along the lines of, you don't want to be using too many indicators. I could not agree with that more. So a lot of people, when they're first trying to get into trading, or even if they're like more advanced in trading, they try to like put on, 5, 10, a billion fucking indicators. And honestly, more indicators I've never seen make a better trader. I've traded around some of the best of the best traders in the world. I've traded with a lot of newer traders who've been successful. I've traded with all sorts of, types of people. And for the most part, I see people do the best with 3 or less. And some of the best guys that I know, they trade with 0. And you have to realize that 90% of indicators, maybe even more than that, are quite literally just based off of price, volume, and time, and in some relationship. So you can always find, or more or less find, what you're looking for on price action in whatever indicator that you might be using anyways. So it's simplicity, and understand that these indicators that you might or may not be using, they're based off of some sort of statistical advantage that is presumably in your favor, right? So the more that you kind of muddle up with that, and the more that you kind of add more and more, you get in the way of those statistics, and you just kind of step on your own toes. And realistically, what you should be doing is you should be, back testing a strategy that you lay out, something, it should be very, very well defined on paper. Take it seriously if you're going to actually take it seriously, because this is a serious thing. I mean, it could be a living if you wanted to. And then go through those statistics and actually back test it and know exactly what to expect. And in that way, you actually can have an edge in the market, and it'll be somewhat in some way unique to yourself. And that's really where you want to be.
Thank you for that. I think this is hugely helpful for the community to also understand that, technical analysis is, you don't need 12 different solutions to navigate this. It's just some very simple fundamentals that arm everyone really
You
well.
stare at a chart for long enough, you don't need, I don't even use grid lines on my chart, like let alone indicators, right? Like, 'cause those throw me off, right? And so
Yeah.
you stare at a chart for long enough, and yes, you do want to learn about all the indicators, because they're telling you something, and you learn about why do you care if something is oversold? What does it even mean to be oversold? I personally hate that one. I don't use that at all, but
Yeah.
but the volatility ones I enjoy, because it's like, how odd is this normal, and things tend to be mean reverting. So depending on what you're going for, you're like, wow, this move is crazy. This thing is probably going to have to retrace back or whatever. You start to visualize these indicators in your head. You don't even have to switch between time frames at one point, because like it's really useful to go from 5 minute to whatever, 4 hour, whatever ones you like, because reasons. But you can kind of start compiling those into your head, and you can say, oh, I can look at the 1 minute and I can pretty much extrapolate the 15 minute from that one, right? And I can extrapolate the support resistance from these things really easily, and then it just kind of becomes second nature. So learn about them for sure, and then stare at a chart all day forever.
BTC Vix, you have something to add to this?
Yeah, so I mean, you just brought up Bollinger Bands, and that actually gives me an idea for probably one of our future guests with John Bollinger, who's actually been quite plugged into Bitcoin and such. And I've had several chats with him before, and I think that's probably one of my kind of bread and butter plays, is the the Bollinger Band squeeze into the breakout aspect of it. And when you talk about Bollinger Bands, you're really talking about the volatility component. And I like to say, especially if you look at some of the higher time frames, to the daily, 3-day, weekly, when you get a Bollinger Band squeeze on those time frames, and I know one of the trading view indicators is Bollinger Band width, and you can go and chart that, and then look for where you had these massive squeezes. And if you think about it, you're really like tightening a spring. The more the volatility, implied volatility comes in, the tighter those bands get, the shorter the width of them, the more potential energy you're generating. It's like two tectonic plates pushing each other harder, with more and more force, and then there's eventually a big move. Those are the moves you really want to take note of and be a part of. And that's where I think there is still edge to be had in the crypto markets. Crypto markets tend to go through very large periods of consolidation into these hard trending areas. So that's just what I kind of wanted to add into my side of things, with where there's still edge to be had.
Amazing. J-Man, does that answer your question fully? You got 3 perspectives there. Not sure if he's still with us. So guys, thank you so much for joining us today for the community. To Eric and Jamie and BTC Vix, this has been wonderful. Eric, we'd love if you could just tell us a little bit more about your show as we close. Just where can people find you? How frequently are you uploading new videos? And is there anything exciting coming down the pipeline that you'd like to mention?
Yeah, absolutely. First, I want to say massive thank you for having me on. I mean, this has been a really, really good chat. Really good to meet a lot of the community here. And yeah, I do a live stream just about every morning, very, very early in the Finnish morning, so it might be late for you Americans out there. Typically around, I guess it would be like, I don't know, 10 p.m. We do a live stream, look at cryptos, look at stocks, look at whatever. And then I'll upload a video maybe like later in the day for a little bit of like a short-term trade analysis. And that's at Krown's Crypto. A trading, or well, it's not necessarily a trading app, but it's an app that's focused on cryptocurrencies called the Krown Trading app, and you can find it for 100% free at app.krowntrading.net. And we actually offer, I believe, to my knowledge, the most free data out of anyone out there, both quant data, market dynamics, price data, all that good stuff. And we're actually adding more to it in the not so distant future. So if you want to check that out, definitely check it out. So again, massive thank you for having me on. It's been an absolute pleasure, and looking forward to more.
Did we lose her?
I think we lost her.
Yeah, you lost me too. You lost me too
Yeah,
here.
one more time.
Yeah, Telegram, I tell you.
We are
All right,
breaking
well, yeah, we're breaking Telegram. So
like in the good old days.
well, thanks. I'll close it down. Well, thanks a lot, Eric, for stopping by and offering that insight and stuff. And I know I always try and tune in kind of late to your show and going over all that stuff. I love how much interaction you have with the audience you have and them
Yeah, it's
asking
fun
about this
time.
coin and that coin. You take a lot of time out to answer all those questions. So that's really cool. So thank you for coming, and we'll open up the channel now and close out the show.
Alrighty.
Awesome.
Take care,
Thanks so
guys.
much.
Hey, chat
This
is
is
open.
awesome.